Good morning, everyone. I'd like to begin by welcoming members of the Pension Fund Investment Subcommittee, including members of the public watching via the Council's YouTube channel and local pension board members observing via Zoom. The County Council allows filming and photography at its public meetings, so please feel free to take pictures and use social media during the meeting. Can I ask, though, that everyone present turns their mobile phones to silent or vibrate whilst the meeting is in place? Please note there is no fire alarm test scheduled for today, so if the alarm sounds, I will adjourn the meeting and we will all make our way downstairs and out of the main entrance. The nearest fire exit is through the middle doors to my left. The muster point is in the car park. Item 1. Dawn, do we have any apologies?
We have apologies from Councillor Costello. I haven't heard from Councillor Sharp.
No. Okay. Thank you. Does any member wish to discuss? Councillor Burden.
Chairman, just to check what the quorum is for this meeting and who qualifies for the quorum, please.
It's 4, and that includes yourself as a district council representative and Mr. Franco. So
we only just quorum it.
Yeah.
The reason I ask is I did give notice to the chair that I may leave the meeting early. I'll now try to stay as long as possible.
Yeah. Thank you very much for that, Councillor Burden. Does any member wish to declare any disclosable pecuniary interest or non-statutory disclosable interest? Me.
Thank you, Chair. I'm the Chair of the Board of Trustees and Directors of the Cambridge Sports Hall Trust, which is an admitted body.
Thank you for that. Okay. So move on to item 2, which is the public minutes, and we're being asked to approve the public minutes of the subcommittee meeting held on the 25th of May 2023 as an accurate record. Can I ask if any member who does not agree with this proposal to raise their hand now? Okay, see no objections, so we will take the minutes as an accurate record as carried unanimously. Move to item 3, the action log. Officers, do we have any comments or updates on the action log?
Thank you, Chair. Yes, there's 4 items on there. 2 are now completed. The first one was a response included on a number of extraordinary general meetings. That was a question in relation to the stewardship report we brought last time to the ISC. So over a 6-month period, there are actually 7, mainly in relation to acquisition and mergers. We have given a little bit more detail to the councillor in question who asked, and they were happy with the response. The second completed task is the passive equity changes. There is a paper to follow in this agenda updating on why we see that as now complete. 2 ongoing relate to future private equity holdings and long lease discussions, which again will be coming up later on the ISC agenda.
Thank you. Members, any questions? Okay. On which basis we are being asked to note the action log, and trust we're all happy to do so. Thank you. Item 4 is petitions and public questions, which we have received no petitions or public questions. So we'll move on to item 5. We'll consider the Cambridgeshire Pension Fund Investment Monitoring Report for the quarter ending 30th of June 2023. Yes. So can I ask Mercer, who's Chris? Over to you. Can I just ask for everyone, can we assume that members of the committee, they've had the papers, we can assume that they've actually read what is in the paper. Please can we deal with the important points within reports, the controversial points, and the points that are going to need decisions. I'm sure that members will be asking questions where they're not clear on what's going on, but I really don't want to spend lots and lots of time going over things which are very clear from the report. Thank you.
Of course, great, thank you. So if we start on page 15 of the electronic meeting packs, which is page 4 of the public report, just to give us a reference point here for what I will keep a very brief market backdrop for the quarter. So global investment markets came through, you'll recall, the banking stresses of Q1 in Europe and in the US, and broadly delivered positive equity returns in spite of the persistently high inflation that we see in markets and continued tight monetary policy from central banks in the US, in Europe, and in the UK. However, when we look through that positive performance for equities, it was really driven by the US. And when we look at global markets of the world, equities, ex-US returns were broadly flat. That positive growth sentiment was also focused in particular on the tech sector, driven by the outlook for artificial intelligence. And the rally was very focused. So within the US index, fewer than 10 stocks made up the majority of that positive return in Q2. So what that means is that the US index has become very concentrated in nature. The performance driven by the strong performance of these very large weighted stocks. When we look through the other asset classes over Q2, it was a positive quarter for growth fixed income. So the likes of high yield bonds, emerging market debt that feed into the multi-asset credit mandates. And those particular portfolios and asset classes have recovered from valuation falls in 2022. However, you'll see some negative blue bars that come through for more defensive bonds. And that was driven by the rises in gilt yields again in Q2, as central banks and the Bank of England continue to raise rates and indicated a strong possibility of further rate rises in the future. And what does this mean for the fund? Again, I'll keep this brief. If we skip back a page to page 14 of the electronic meeting packs, or page 3. So from a funding perspective on the top left, in broad terms, the fund's liabilities fell because of the linkage to gilt yields, while assets rose, driven by positive absolute returns for equities and for growth fixed income. The funding level stood at the end of Q2 at 165%. Assets on the top right, to note, there was lots of activity over the quarter. We will cover this in detail later on the agenda. The strategic asset allocation is moving towards the new target, which involves lots of transition activity. And again, we will cover that. And so we wouldn't expect the asset allocation to be in line with the new target yet. And performance on the bottom left. So the headline return over Q2 was a positive return of 1.4% over the quarter, positive 3.8% over the year. Those returns are very positive when we consider relative to the liabilities. We know what we've seen from the liabilities over those periods, but behind benchmark, and we'll pull out the key points from a manager level in more depth during the private session.
Chris.
Thank you, Chair. I fear this question has been asked and answered before, may well have been asked by me, but my apologies that I don't recall the answer, or rather, I think I do recall the answer, but I'd like to explore it again. We see on page 4 that a significant proportion of the gains which would have been realized on sustainable equities and on global equity, and in some other areas as well, have been lost because of the weakness of the pound. Now, my recollection is we don't have a mechanism in place either to protect us or, for that matter, to limit our gains. We just roll with the flow when it comes to exchange rate losses. Am I right in remembering it that way? And if so, well, it's always difficult in the quarter and in the year when you're showing that the pound has depreciated. It's of course going to be going to show very badly indeed. I'd just like to explore that a bit further and just check that my memory is correct.
Yes, sure. So at very high level, there is some currency hedging within the equity portfolio across the passive equity mandate. The active equity mandates are unhedged. So that's just hopefully to address the first question around what the currency hedging arrangements are. There are other elements of currency hedging throughout other asset classes as well. I suppose the second point I will make very briefly is around the periods that are shown. So we show the 3 months and the 12 months. When you look back over 3 years, actually, the dollar was very strong. And so the unhedged portion of those equities will have benefited from not being hedged. Hopefully that's a brief answer to both of those questions.
Yes, what we don't have though is the quantum of the effect of the hedging that we have. And I think I would be interested in understanding or having a figure showing the extent to which we are effectively unhedged on those investments which are in currencies other than sterling.
Yeah, so we do have those numbers kind of not in front of us now. Maybe we can share them with officers after the meeting and can circulate.
may I just ask that in future meetings, we have that in our packs as well? That would be really helpful, I think, because I've got no idea about our exposure to currency fluctuation because I don't have that data.
I think that would be useful piece of information, understanding clearly that an awful lot of the things we're talking about are unrealized gains and losses in any case. But we certainly do need to understand the impact that this is actually having. So if we can consider a way of actually doing that, that would be useful. Thank you.
Thanks. In very broad terms, it's 70% of around 45% of the equity portfolio that's passive. So very quick maths here, I'm putting myself on the spot, is about 33, a third or so of the portfolio is currency hedged. That relates just to the equity portfolio, but as Pete said, we'll come back with some more refined figures for future meetings.
And my calculation on that is that 67% is therefore unhedged, which is, I'd really, now is not the time to do it because we haven't got the numbers in front of us and it's unfair to place everyone on the spot. But I would be very interested to convert that into actual values and then see what level of risk it is that we are exposing ourselves to. Of course, there are two sides to it. There's the risk if the pound continues to weaken, but then there is the opportunity if the pound strengthens. And don't ask me which direction it's going in because I've got no idea.
I think it's quite important, and I think it's one of the things that actually is coming out more and more is the fact that clearly we have a lot of money. A lot of that money is being invested overseas, and one of the challenges that's being put to funds is actually why we're investing so heavily overseas. Why are we not supporting UK businesses and UK companies? I think we have to understand all of the risks that are involved and all of the potential benefits that are there for us as well. Thank you. Okay, is there any other points on the public part of the report? No? See nothing, so we are being asked to note the report. Are we happy to do so? Thank you. It brings us to item 6 and following items on the agenda exempt from publication. So the subcommittee will need to decide whether to exclude the public and press from consideration of the following items on the grounds that the reports contain exempt information under paragraph 3 of part 1 of Schedule 12A of the Local Government Act 1972 as amended, and that it would not be in the public interest for this information to be disclosed information relating to the financial or business affairs of any particular person, including the authority holding that information. May I ask if there's general consensus in support of the recommendation so that the subcommittee can take it now, or if anyone disagrees? No. In which case, we will now move into private session. As we are doing that, that ends the public part of the meeting, and we will now stop the streaming via YouTube.